Good morning, good afternoon, and good evening from the San Francisco Bay Area. Thanks for joining us for the launch event of our second annual Global Private Market Trends Report. The report covers key trends happening in the global innovation economy and really inspired by the bank's core belief that the innovation economy is truly global and our nearly 30 years of business development in international markets. We took our first trips to Asia and Europe in the late 1990s. Later, we had physical operations in several innovation hubs around the world, and today we serve global markets on a cross-border basis from here in the US. I'm Andy Tsao, a Managing Director here at SVB and head of our Global Gateway. And what is Global Gateway? Today, it's the center of business development and relationship management for international markets at SVB. We work with startups, scale-ups, and investors, largely VCs, in key innovation hubs outside the US. I'm a longtime SVBer, spending the last 2 decades plus helping to build the bank's international business. And the pivot in my own career was being global employee number one in the summer of 2004 when I moved to London to launch our business there and grew that business until returning to the Bay Area in 2010 to found our Global Gateway. If you haven't checked out the report, I'd encourage you to download it, give it a read. Would love your feedback and let us know what you'd like to see in next year's edition. Over my career, I've seen a few cycles, and I think this moment might be the most interesting time for the global innovation economy. Despite all the consistent backdrop of geopolitical uncertainty last year, VC deployment in the US roared to over $320 billion of deployment. When you consider that only a couple years ago, at the peak of the last cycle in 2021, that $330 billion was invested. It's essentially, last year we matched the top of the last cycle, which is incredible. The boom, of course, was driven by AI, and not just AI, but big AI, so foundational AI, if you will. And when you consider that OpenAI by itself raised $40 billion, it really gives you a sense of how concentrated VC funding here is here in the US. But when you zoom in and you look at the, sort of the ticket sizes of less than $100 million, that's where more of the traditional venture investment was happening, right? And let's face it, that part of the fundraising landscape is still pretty challenging. Investor expectations have reset in terms of revenue growth. Because of AI tools and applied AI, there's expectation of higher revenue to valuation and as well as capital efficiency. And by the way, outside of the US, this is where most of venture is happening, right? Because at that sub $100 million level, because big AI at the end of the day is really mostly a US phenomenon. Yes, of course, you can put China into that category and sprinkle in a little bit of Europe, but mostly here in the US. And our friends and investors in global markets are reporting terrific companies to invest in, companies that are AI driven at the application layer, but with valuations that are much more attractive than here in the US. So the good news is that VC deployment in international markets have stabilized back to pre-pandemic levels. We're seeing steady growth across the board. Of course, some markets growing faster than others. And all of this is covered in our report, so we're excited to launch it officially with you this morning. We're going to kick things off with my colleague and co-author, Jake Ledbetter. He and I are going to be presenting you some of the findings from the report over the first 20-25 minutes. Then we're going to switch over to a series of interviews with leading global VCs, some of our friends who will give you their perspective on what they're seeing on the ground. Jake, over to you.
Andy, thank you so much for that introduction. And thanks to everybody for being here today to learn just a little bit about our report. I'm excited to be sharing just a few of my favorite charts and analyses from this report. But as Andy said, please feel free to download, take a look, and let us know what you think. So let's jump in with the next slide. So to get us started, we're going to take a look at the US VC market overall today. And as Andy was mentioning, in terms of capital deployed, we're really nearing that peak that we saw during the run-up in 2021. However, it's much more concentrated than before. The lion's share is going to those mega deals, so deals over $500 million. This is shown in the orange bars on the chart. And these deals are, of course, dominated by AI, and they're increasingly driving the market. Meanwhile, those deals under $100 million, what we might consider traditional venture, they've really stagnated in terms of dollar amounts, and those are shown in the light blue. There, capital deployed looks a lot closer to 2019 levels and has not necessarily recovered after that venture reset of 2022 and 2023. Now, on the next slide, we take a look at where all of this capital is really coming from. And for all the talk about onshoring and nearshoring and shifting away from globalization, innovation really does remain intensely global. About 20% of the capital that US VCs raise comes from outside the United States. Now, Europe and Asia are, of course, the biggest sources of this capital, but I think one of the most interesting growth stories over the past few years has been the Middle East, which is really not too far behind Europe and Asia. Now, many US VCs are really focusing their fundraising efforts in that region, and you even see some opening offices there. Now, it's of course a long runway, and when we talk to VC investor relations professionals, they report multi-year timelines to secure commitments, and there's certainly fierce competition from other US VCs in the region. Now, on the next slide, we want to round out this overview of the market by moving from kind of the VC and investor lens to more of the company or founder lens. And when it comes to VC-backed companies in the US, foreign founders play an outsized role. So on the left, we show the share of top US unicorns and valuations by founder origin. Now, over half of US unicorns were founded by foreign-born founders, and these unicorns really do punch above their weight. They account for more than three-quarters of the total valuation of this group. But after nearly a decade of a more restrictive immigration posture in the US, the immigration ecosystem is certainly changing. And we see this in startup and founder visas, for instance, which are trending down in terms of issuance. And this is directly affecting foreign companies coming to the US. They are waiting longer to open American offices, and this is shown on the charts on the right. Of course, the US is still a critical market, and San Francisco, for instance, remains perhaps the undisputed AI hub across the world. Founders still see the US as kind of that place to be, but making the move is definitely more complicated and occurring later than it once did. Now, Andy, this is a lot of data to get us started, and I'm wondering if you can help kind of ground what we're seeing here in the numbers with what you're seeing out in market.
Yeah, thanks, Jake. So let me give folks a context, some context in terms of my comments and the perspective we're seeing on the ground. And so our Global Gateway team over the course of 2025 took 10 international trips to visit our clients and partners, covering 13 different countries. And as we sit here at the end of February, hard to believe, that I've had team members already spending significant time in Shanghai, Beijing, Hong Kong, Abu Dhabi, and Dubai. And so these conversations are really playing out in boardrooms and co-working spaces around the world, right? Our clients are noticing the volatility here in the U.S., which was traditionally very consistent in terms of behavior, and we could see the incredible importance of both global capital flows and global founders to the U.S. Innovation economy. So, from an investor lens, if you think about as they look at the U.S. market, asset managers have incredible concentration in the U.S. market, right? And they are concentrated not only in U.S. assets, but U.S. dollars. And so there is a desire in today's more volatile environment to diversify from both U.S. and U.S. dollars. And as far as founders go, there's certainly opportunities to, and you can see how if these global founders decide to go to another market, and again, let's face it, there's global competition for for talent that some of these unicorns may end up being built in other markets. And so what we're seeing from some of our founder and early stage venture capital friends is an interesting reaction to some of the volatility in the US, which is, hey, we need to pay attention to the other superpower as well. And let's say tech superpower in terms of China is the second largest innovation market in the world. So I'm aware of several delegations from Latin America, for example, that are intending to spend time in China this year. And when you spend time in the Middle East, there's a lot of openness to business with Chinese tech, and so I think founders and investors are considering both markets at this point. In addition, I would say that when you look at investment in innovation from in certain countries today, like Singapore, Japan, UAE, etc., that it's almost akin to public policy, right? As these significant investments are going into venture capital firms and startups, that there's an expectation of knowledge transfer of investment in the local region. And so, there's a lot of activity with both global founders and global capital flows in this kind of transition-like market.
Thanks, Andy, for that overview. And kind of speaking of, policy, now that we have kind of this overview of what's going on in the market as a whole, on the next slide, we will kind of dig in a little bit into one of the defining trends that we're seeing, which is the rise of defense tech and cybersecurity as real kind of focus areas for investors and founders. Now, if we think like 5 years ago, defense tech was not really being discussed in polite VC conversation, but today it's really ubiquitous. And we wanted to quantify that increase in defense tech talk. So we analyzed nearly 5,000 tech and VC podcast episodes from the past 6 years. And we identified the frequency of keyword mentions related to defense tech. Now, shown on the left chart here, there really is a sharp uptick post the November 2024 elections here in the US, as expectations increased for more military funding under the new government. Now, VCs quickly followed this trend. In the US, defense tech VC and growth investment doubled, shown on the right. But outside the US, there are some important things going on, and perhaps most interestingly in Europe, the war in Ukraine has driven governments to increase their military spending, and the nature of that conflict in particular has made tech and innovation extremely important. VCs have really taken up the call to fund development of more of those kind of dual use technologies. And as one of our interviewees mentioned when we were doing the research for this report, VC has really moved toward defense tech because that's where the demand and real innovation are happening. It's where that bleeding edge technology is being built today. Now, on the next slide, directly related to defense tech is what we're terming cyber AI. So kind of the bridge between defense or cybersecurity and artificial intelligence. And Israel is a really good example of a market with this vertical at its center. And the biggest story on this front is, of course, the exit of Wiz, the cloud security company. And on the left, we show the largest M&A deals in Israel from the past couple of years, with Wiz the clear frontrunner after it was acquired last year by Google for $32 billion. And on the right, we have the VC amount invested and deal count in Israeli companies over the last 7 years. And kind of amazingly, the Wiz exit amount is more than double just 1 year's investment, 1 year's worth of VC investment in the country. So it's just injected a ton of capital back into the ecosystem, adding to that flywheel of capital and talent. It's a small market, but there is a significant amount of talent, capital, and tech that's exchanged with other countries, especially here in the US. For instance, US investors participate in about half of Israeli VC deals, and companies like Wiz often locate their headquarters or significant offices here in the US. So, Andy, I'm wondering if you could tell us just a little bit more about how you've seen the conversation shift over the past few years when it comes to things like defense tech and cyber AI.
Yeah, thanks, Jake. I like to oftentimes say that what happens in global markets is oftentimes an echo of what's happening here in the US. And so, I think folks on today's webinar understand that defense tech has really surged over the last couple of years. When you look at here in the U.S. market, obviously the U.S. is the biggest spender on defense in general as a country. You frame it against Europe, we're about 5 times the amount of spend on defense as Europe does. But as you noted in Europe, there, obviously with an ongoing military conflict, there's certainly more sense of urgency as European ministers have already set the target spend from the minimum 2% required by NATO to 5% by 2035. And that additional spend will translate into $1 trillion of spend in the defense sector. So you can then understand why European and global VCs are really interested in investing into that space. And when you consider, the tools of modern warfare, and we'll talk about Israel and Wiz and cyber in a moment, but whether it is cyber, whether it's autonomous systems and artificial intelligence, drones, those are all the sort of defense side of the dual purpose tech that venture investors have been investing for years. So again, it's kind of a natural evolution. And one great example in Europe is the German company Helsing, which is, you might say is a counterpart to Anduril here in the US. It was founded in 2021. They've raised over $1.5 billion. The last round closed in June of last year with a reported valuation of $12 billion. And when you look at who the investors are behind that, you have firms like Lightspeed, and we'll hear from Paul Murphy a little bit later. We have General Catalyst, other global investors. So again, following that, investment trend into Europe of defense tech, and with Wiz, and which is obviously another example of dual purpose technology, an incredible exit when you think that Israel, the startup nation, to be able to say, hey, this is the biggest M&A transaction in its history, really says something about how Israel is really a leading powerhouse for cyber around the world. And maybe the evolution of the term startup nation, we can also say Israel is the scale-up nation. And to your point, Jake, Israeli tech companies have always looked at the U.S. market with, sort of rapid go-to-market and commercialization. And over what we saw with the ongoing conflict in Israel, that was happening even faster, right? Israeli companies were coming large, New York being the biggest recipient of Israeli companies. They're really coming to New York and being U.S. on day one. And so, Wiz, for the uninitiated, people would have thought, hey, that's a New York-based U.S. tech company. And, the reality is it's an Israeli company. And that is a very common phenomenon around New York. And again, as you note, there's a lot of intertwinement between how the Israeli companies are funded by both Israeli and U.S. investors, as well as, sort of the go-to-market here in the U.S.
Yeah. No, thanks for that background, Andy. That's some helpful information. And I want to double click on kind of one of the things that we've been circling a little bit, which is, of course, AI. So on the next slide, I think it's worth taking another minute or two to just discuss a couple of these trends in more detail. And in particular, what I think is interesting is this distinction between kind of the two centers of gravity when it comes to AI, which is the US and China. Now, the two countries are taking very different approaches to funding AI development, and we look at just a couple of those differences here. So first, the US is dominated by private capital. We've seen kind of on the first chart, VCs pouring money into these AI megascalers. And on the left chart, we show fundraising by just one American AI company, OpenAI, which has raised more VC funding than all known Chinese AI companies in the past 3 years. The US, however, has less of an emphasis on kind of that fundamental research. We have kind of ongoing discussions around cuts to the NSF and university research funding generally. In China, on the other hand, there is less private capital and more emphasis on that fundamental research. So over the past decade, for instance, China has surpassed the US in academic articles on AI, and that gap is really continuing to grow. So what's happened then is that Chinese models have had to do a lot more with less. costs have trended lower than their American counterparts. And the chart on the right captures some of this dynamic. It shows performance on the vertical axis versus cost on the horizontal axis. And we compare several large AI models. So on the far right of this chart, we see the more expensive models like Grok, Claude, GPT-5 not too far behind. They perform very well, so they're kind of high up on the chart, but they're expensive. The Chinese models, on the other hand, are far cheaper but sacrifice some performance, and DeepSeek is perhaps one of the most notable there. And Andy, I know that you and I have had a lot of conversations about these dynamics and how the DeepSeek moment in particular has really kind of redefined the mood in the Chinese AI ecosystem. I'm wondering if you could speak a little bit more about that change and how you've seen the mood shift.
Yeah, thanks, Jake. Yeah, it was a real game changer, the DeepSeek moment. And when you that happened this time last year, right? I think it was January of 2025. And when you consider how much money was that OpenAI had raised at that point in time, I think that first DeepSeek model was built on $6 million, so quite a difference. And let me frame the change in mood with my personal experience. I was there in China in the summer of 2024, pre-DeepSeek, and the mood was really low within the innovation economy. We met with our many of our clients who are venture investors and some founders, and there was a real feeling that China was falling way behind the U.S. In terms of AI technology and the AI race, if you will. There was the inability to access the top compute power in terms of the chips, like NVIDIA's Blackwell, for example. There was the sense that the amount of capital going into AI in the U.S. was much greater than what was happening in China. So when the DeepSeek moment happened in 2025, it was a real sea change moment for the Chinese innovation economy. They felt like, hey, wait a minute, we are still very much in the game. And that kind of surge from that moment also translated into the Chinese public markets, right? Which, when I was there in 2024, I had been kind of languishing. And you've had this surge in the Chinese public markets from 2025 going into 2026 this year, where the Chinese public markets have been amongst the top performing around the world. And so again, I think as where we stand today, based on the aha DeepSeek moment of last year, that there's a feeling in China today that the AI race is still anyone's game and that they're very much still in it.
Yeah, it's been a really interesting kind of transition over the past year or two to really watch the mood shift. Um, Now, to round out our discussion of the report, we cover a bunch of different regions, and we want to highlight just two emerging markets where we're seeing some really interesting movements. So on the next slide, we look at the first of those, which is Latin America. Now, the LatAm market continues to mature and it's becoming increasingly global in nature. And we discussed this global facing posture in the report, but we'd like to highlight just two things here. And the first is talent. So, one of our interviewees, when we were researching for this report, she's a VC in the region, and she mentioned that the quality of engineering and product talent coming out of LatAm today is unlike anything that she's ever seen before. And evidence of that global competitiveness of the tech talent in LATAM can really be seen with the O1 visas. So that's the US's Extraordinary Abilities Visa. Brazil is leading the pack in terms of the number of O1 visas issued, outpacing countries like India and China even. And when it comes to industry specialization, LATAM is not necessarily competing on the frontiers of AI like China or the US, like we were just discussing, but rather it's carving out this really kind of interesting and important niche as a global fintech market. And landmark outcomes like Nubank have provided that kind of proof of big positive outcomes in the market and really strengthened that flywheel effect of talent and capital. And speaking of that kind of capital flywheel effect, on the next slide, the last thing we'd like to highlight is India. And while most of the world has really dealt with some weak exit markets over the past few years, India has been kind of that diamond in the rough. So IPO numbers shown on the left have tracked upward consistently over the past 5 years, really defining what the liquidity cycle looks like in this market. It is important to remember, though, that these IPOs are generally smaller and take longer than American IPOs. It's just a younger market. And one of the folks who we spoke with said we should kind of think of it like US IPOs in the 80s and 90s. But regardless, it's still leading to some of those serious flywheel effects because, as we show on the right, much of the VC funding is coming from domestic LPs who are now seeing those investment dollars returned from liquidity events like IPOs. And it's giving those local LPs the capital to be able to redeploy, reallocate back into the market. Now, Andy, I'm curious if you could kind of close us out with some of the thoughts that you have on these flywheel and liquidity dynamics and how they're playing out in your conversations with investors and founders.
Yeah, of course, Jake. So yeah, India and LATAM, two regions we have significant experience in, and that we're still super excited about. Let me start with India first, and we took our very first trips to India back in around 2002, 2003 timeframe. So if you had told me back then that we'd be sitting here in 2026 looking at last year for India having the most IPOs out of any market in the world, I would have, been flabbergasted at that fact. And of course, those aren't all tech IPOs, but certainly tech is a component of that and a growing component. And so what we're seeing with India is really quite interesting from the bank's view. Um, the Our clients traditionally had come. India had become such a strong SaaS hub that we saw many SaaS companies coming to the U.S. to launch and go to market here. And so, no surprise, they were setting up U.S. entities, a U.S. headquarters for those Indian companies, with the expectation of exiting here in the U.S. Well, that has now begun to change because of the ability to list in India. And by the way, listing in India, you can do so much sooner than you can here in the US. And so there's ability to get liquidity sooner. And so now today we're seeing either where the India company now is the headquarter and the US entity is now the subsidiary, so an inverse of what we had seen, or sometimes the use of more creative structures like Cayman Island, where the ability to flip back to an Indian entity to list on the Indian Stock Exchange is, it's just easier to do it that way. And so when you look at, the liquidity, as you say, India being the world's fastest growing large economy for, I've lost track of how many years running that's been the case, but there's just a growing confidence in India. Well, I was there in November, that these markets will continue to grow as the middle class continues to fuel the markets, and I think we'll see a lot more of this to come from India. With respect to Latin America, and I'll wrap up here quickly, but we took our first trips to Brazil. In fact, I met Julio there, who's coming up shortly, on that first trip back in 2012. And it was very apparent from the get-go that you could see how technology would solve in some of the real challenges that the country and society had in general. And there was no wonder why there was a lot of startup investment in the region. And because of the friction of doing business in Latin America, you have to be a pretty darn good entrepreneur just to be able to get your business off the ground and scaled. And so that's something we noticed as well very quickly, is that you had great entrepreneurial talent. So it's no surprise that you see Brazilian talent sort of really everywhere here in the U.S. in roles that you might surprise you, right? So let me just illustrate with Brazil and Nubank. You mentioned probably one of the most successful fintechs and neobanks in the world. When I met David Velez, the founder and CEO, at that point, Nubank was all about a credit card. And I said, oh, well, what's the credit card rate in Brazil? And he said, oh, about, 17%. I'm like, oh, well, that's not terribly different from the US. He said, oh, no, that's on a monthly basis. And I was like, wow, that really illustrated the opportunity that Brex had that Nubank had to disrupt the traditional banks. And closing out, Mike Krieger, one of the founders at Instagram, Iniki Dubagras, Brex, Hugo Barra, Xiaomi. On the VC side, Mickey Malka, Wences Casares of Ribbit, Marcelo Clary from SoftBank, on it goes. There are incredible entrepreneurs coming out of Latin America. No surprise to see them doing well on a global stage.
Awesome. Thank you, Andy.
Of course. And so I think that wraps up our comments, and we're going to go over to the interviews.
Thank you, Andy and Jake, and good morning, Paul. Thanks for joining us today. We've got a lot to cover, so let's jump on in. So, Paul, from your perspective and your experience at Lightspeed, what shifts are you seeing in UK Europe around fundraising timelines, valuation expectations, and investor selectivity compared to a year or two ago? And also, are there any particular sectors like defense or dual-use technologies where dynamics look meaningfully different to you?
Yeah, well, first off, thanks for inviting me. Happy to be here and talk about, things. I think just as context setting, obviously I'm looking at this primarily through a European lens, but we're a global fund. I'm still part of the team that invests in the US, so hopefully I can provide some contrast on things that are different. I think overall, the timelines have definitely stretched. I think from our perspective, I would say the dynamic at play right now is you have a bit of a tale of two cities. You've got a set of companies that raise money and it's like they can't raise it fast enough. It happens in 24, 48 hours. But those are really the exceptions. Of all the companies that we fund, I would say that's probably less than 10%. The rest of them, which are obviously great companies we're excited about, their competitive processes, they're not running as quick as they were last year. So you're looking at several weeks to maybe even a month or two for anything that's kind of Series A or later. And I would say by and large, valuations still follow slightly different camps. There are the kind of exceptions and then there's the rest of the market. I think valuations are coming back. This might not seem the case if you sort of read TechCrunch, but I think valuations are coming back down to earth a bit more now. And we're seeing, more focus on fundamentals, revenue multiples, retention, profitability, durability of kind of revenue. And so that all feels actually quite healthy. I'd say most of the sort of tourist capital that was in the market last year doesn't appear to be as active in the market. I think you asked about some sectors that maybe feel different, and you mentioned defense, and this is where I'd say, at least from a European lens, defense is the exception. There's a sense of urgency and importance around defense in the market here. And there's a few funds, I think we're one of them, there's a few others that really understand the opportunity that exists for European defense companies. And those companies, assuming they have world-class team, really unique product offering, are getting funded very quickly.
Yeah, thanks, Paul. On the thread of sovereignty, so how are European AI regulations and policy frameworks influencing where and how AI companies are being built, funded, and scaled?
I think, first off, the European regulation sort of trope is somewhat overplayed. It's really not as bad as people make it out to be, especially if you look on Twitter.
We heard it here.
Yeah. They're known for some things like the bottle caps and other sort of silly regulation. But I think overall, the reality is it hasn't prevented any of the European companies from, we're obviously large investors in Mistral and I'm on the board there. It hasn't sort of slowed us down in any meaningful way. In fact, I think it's put some emphasis on topics that we think are important, like data sovereignty, the value of open weight models. So that I think overall is quite good. There are some verticals like health, legal, finance that do have to think about compliance from day one, perhaps more in Europe than they would in other markets. But even that I think is manageable if you've kind of been through the GDPR transition in the past. It's different, but a similar process.
Oh, thank you. Going on a different topic. So the report talks a lot about alternative liquidity paths becoming just more important. How active are secondaries in Europe right now, and how should founders think about using them strategically?
Well, I think there's two different types of secondaries that are happening. I think on the company level, you are seeing more secondaries happen with founders and early employees. And I'm actually a pretty big fan of that. I think it's important that early employees, especially in Europe, where I would say the sophistication of the value of equity is not quite at what it is in the US. I think it's important to show early employees that, hey, you can actually generate some wealth from being at a company like this beyond your paycheck. It also, I think, provides a release valve. It reduces the pressure to sort of sell early, which is something that we're really advocating for our European companies. We think they can build global leaders, companies that are worth $50+ billion. And that only happens if you give these companies time to mature and develop. So I think that's good. Obviously, there are unhealthy levels of secondary that can also happen. And so we're just constantly trying to advise our founders as to what the right level is. The other kind of part that's happening is on a fund level. And actually, you're seeing a number of different vehicles form, like continuation vehicles for funds, or secondaries being used as a means to buy out early institutional investors from companies. And again, I think that has its place. It's nice to have patient capital in a company. And some of those funds, the reality is they really do need that liquidity. So I think right now it's kind of working quite well.
Thank you. And then my last question I had to you. So this one is an interesting one. The global talent race is on, and it's increasingly hard to immigrate to the US to launch a business or even just study there. How is UK Europe making a play for global talent?
Well, there's talent, I would say, that is already in Europe. And I think one of the things that has happened over the last few years is you're seeing less of that talent maybe think by default, I need to go to the US. They're thinking, actually, not only can I stay here because there's great companies, but maybe I want to stay here. Maybe I even feel like there's a reason for us to build this company in Europe, and that becomes core to the business itself. So I think that's one aspect. The other aspect is there's European talent existing in the US, and actually a lot of the best companies that we know of have European researchers, engineers, business leaders that have been in those businesses for years and have gone through a few successful kind of exits themselves, and they're now coming back. And so these are like two, from my perspective, investing in European companies, it's a really exciting talent pool, because you get people that have the playbook that are coming back, and people that feel sort of mission driven to build their companies in Europe. And I'd say Europe and the UK have done some really good things. They've made it very easy to get visas to come into the region, and do that in a matter of weeks, whereas the process is still quite difficult in the US. So I think there's a lot of things that are working, and there's some of the companies that kind of come to mind: Mistral, of course, Wave, Helsing, Proxima. These are all bringing world-class talent into the region. So I think it's a great time to be building a company in Europe.
That's amazing. Love to end on a positive note. Well, thank you so much, Paul. I'm going to pass it over to my colleague, Kieran.
Thank you so much for having me.
Thanks, Sarah. Great conversation. Good morning, everyone. I'm Kieran Malhotra, and I lead our cross-border efforts for the India market on SVB's Global Gateway team. I'm delighted to welcome my guest this morning, GV Ravishankar, Managing Director at Peak 15 Partners. GV, thank you so much for joining us today.
Thank you, Kiran. It's wonderful to be here and share my thoughts.
Before we get started, can you tell us just a little bit about yourself and about Peak 15's investment thesis?
Of course. So I represent Peak 15 Partners. We are a global venture capital firm with roots in India and Asia. We started early 2006, so we're up 20 years. To actually in a couple of months. And I joined the firm early 2006 as well. So it's been 20 years for me as well. So it's been a long journey where we have seen India grow and expand and create these globally relevant companies. We invest mostly in three sectors. So starting with consumer internet consumer as one sector, financial services, fintech, which is a very large sector for us, and software and AI, of course, in the recent few years. So those would be the top three sectors in investment thesis for us. We're also starting to invest in deep tech and modern manufacturing and sectors like that, which are becoming emerging sectors in India.
Excellent. We got the right person here. So let's dive right in. GV, 2025 was quite the year for the India tech market. Huge surge in public listings from 70 in 2020 to 350 in 2025. Huge number, right? Not all of those were tech IPOs, but still a large number. And it made India the #1 IPO market last year. So with all this energized exit activity, it seems to be giving founders and investors a very clear path to strong public companies building. My question to you is, with all this liquidity that's being generated from these IPOs over the last few years, can you talk about what this means for the Indian innovation economy? How are you seeing this impact Peak 15's portfolio, and how you think about investing in this type of market?
Thank you for that question. And look, it's a really important topic because over the last 20 years, like I said, when we've been investing in India, the #1 question that we were asked by limited partners was, where's the liquidity in India? Look, you guys talk about the potential in the country, but where are the returns? Where are the dollars back? And in the last few years, we are starting to see that the cycle complete. More and more companies are able to go public. And in these listings and after, people are able to return cash back to shareholders and so on. So clearly the cycle and the momentum is working. Now, this is to just talk about why this is happening. There's a lot of retail participation in Indian public markets, and that's really creating so much liquidity that there's a lot of reception towards tech IPOs. Now, of the 350 odd IPOs you're talking about, only about 60 or so are tech and venture-backed companies today. So it's still very early. And of the $5.3 odd trillion in market cap that India has, less than about $150 billion is tech-backed companies. So it's still very early days. Less than 3% of the market is contributed by tech IPOs and so on. And we only see that improving. Now, what does that mean for investors? Now, we can imagine a company being angel funded, seed funded, Series A funded, and going towards an IPO within 5 to 10 years. And so the whole liquidity cycle is now starting to happen. And that encourages a lot more investors to come in with capital and participate in the early stage ecosystem. And that in turn encourages a lot of founders to start companies because now significantly more risk capital is available. And similarly for Peak 15, we are encouraged by what we see. We've had in the last about 5 odd years, almost 20 IPOs from within our own, companies. So we are starting to see that, look, what we invest as a thesis to seeing it to fruition is happening within a single fund cycle of 10 years. And that is encouraging us to say, hey, pace of innovation is improving, quality of founders is improving, the ability for us to back and return significant amounts, multiples of our capital is also significantly improving.
Yeah. Yeah. I mean, you touched upon this. So let's talk about the early stage. You talked a little bit about the spillover effect that's happening, right? With all this new capital that's being poured into the ecosystem, you're seeing more founders come out of these exits and starting companies. And what impact do you think this is going to have for the flywheel effect in India?
Yeah, very significant, Kiran. So, when we started investing in the country, we were meeting a lot of first-time founders and people that, were out of school, maybe engineering college, IITs, starting companies, etc. They're very raw. They didn't understand how company building happens. They were good product people. They had good technology and ideas, but not necessarily a lot of business acumen when they began. And then, all of this is now changing because a lot of people have worked for these fast-growing startups. Flipkart being a good example, but even within our own portfolio, we have a company called Rebel Foods, where we have been shareholders for the first 15 odd years. From that company, 2 new companies have come out, and one of which is a company called Mosaic Wellness, where we are part of, another called Whole Truth, where we are part of. Both of these are doing really, really well. And these are almost like second-time founders, people that went in high-growth startups, understood how companies are being built, learned from their experience, and then when they start, they have a much faster ramp, right? And we have backed a company called Scapia, which is Flipkart Mafia. So many, many examples where people have come out of these very large companies, very fast-growing companies, learned how company building happens, and then they're doing it for themselves. This allows this acceleration and a faster learning curve for them, and hence value also being built quite fast. So the feedback loop is being closed. The flywheel effect is actually coming into play, where more and more companies are now being formed with people that have got the experience, and now they're able to take these companies to scale with fewer missteps and faster ramp.
So we have a few minutes left. I know you spent a lot of time in Dubai. Actually, you're there right now, as well as India. In these last few minutes, can you give us your thoughts on the possible connections and opportunity for the diaspora between the Middle East and India, and any advice you have for these founders that are trying to navigate this corridor?
Yeah. Look, we are at very interesting times in the Middle East region. So UAE is performing really well as an economy, and Saudi as well, which is a very significant market in the Middle East. Now, this opportunity again has not gone unnoticed by founders in India. We have seen several companies from within our own portfolio starting to expand into the region. And what are they getting to see here? So unlike India, which is a high volume market, low value market, because of our GDP per capita being significantly lower than Western markets, and certainly compared to the Middle East, founders are saying, hey, I could have a very profitable business, even if it's not as substantially scaled up as in India. The opportunity is to build smallish businesses, but very profitable businesses in regions like the Middle East. So I spoke about Rebel Foods. They have a business in this market, where some of their brands are been there for the last couple of years. It's the fastest growing market for them, and now a very profitable market for them. We are starting to see other direct to consumer companies and brands starting to expand. We have a luggage brand called Mokobara, which is talking to the modern traveler with their unique styles and designs. They started in India. They launched last year in the Middle East and is doing really well. We've seen many other lifestyle companies saying, look, we can also go into these markets and expand. So in categories like food, personal care, lifestyle and so on, people are seeing the opportunity to bring their, design sensibilities to an audience. By the way, this part of the world has a lot of immigrants, as you called out, that there is this corridor here. And so the Indian sensibilities, people are finding kind of takers for that, because there's lots of people from South Asia in these markets. So this opportunity is what founders are going behind. So you are coming into a richer market, which has, some design sensibilities that are similar to what we have seen in the other parts of Asia. And then if you can find product market fit, you can build reasonable scale businesses that are extremely profitable. We're also starting to see fintech companies do that, fintech infrastructure companies, technology companies. We're starting to see some software companies say, hey, again, we can get large enterprise customers in these markets, the likes of Etisalat or, players like that, who can actually afford to pay significantly for software. These are all opportunities that the founders are going behind. So the early signs are very positive. I wouldn't say this is still a flood of companies coming here, but I think it's a matter of time. More and more people will wake up to this opportunity. I'm quite excited about this corridor.
Yeah, fantastic. It sounds like there's a lot of opportunity. We'll have to keep an eye on that one for sure. GV, thank you so much again for sharing your expertise with us this morning. Really appreciate it. I'm going to now send it to Sawyer.
Thank you, Karen. Pretty fascinating all that's developed in India. Now shifting over to Israel. My name is Sawyer Levy, and I'm associate with the bank covering Israeli startups and funds. I'm excited to welcome Amir Zilberstein, managing partner at Team 8 and one of the most respected voices in the Israeli market. Amir, in the report, you speak to some of the ingredients for success in the Israeli cyber ecosystem, the talent pipeline from military intelligence being one of them. Can you expand on what you think makes the Israeli cyber ecosystem so prolific?
Sure, but first, thank you for inviting me and for long-term collaboration. So Israel's success in cybersecurity is a combination of two factors, the talent pipeline and the mature startup ecosystem. I'll start with the talent pipeline. In Israel, cybersecurity is a top national security priority for obvious geopolitical reasons. Every year, top cyber units such as Unit 8200, under government mandate, screen the entire population ages 16 to 18 to recruit the top 1% for a mandatory service of 3 to 6 years. They then train them to become cyber experts and quickly throw them into service in an intensive work environment. During their service, they gain hands-on experience working on complex cyber problems and facing the most sophisticated cyber adversaries. They also get plenty of leadership opportunities, and it's not uncommon to see at 20 years old commanding a dozen people or more. 3 to 6 years later, this talent pool is naturally flowing into the workforce. They're young, energetic, and used to working hard. This situation is unique to Israel, and that's what actually jump-started Israel as a cyber nation years ago. The second factor is the cyber startup ecosystem in Israel, which has evolved significantly over the past decade or so. Early successes attracted more investors and inspired more founders to start companies, which in turn created even more success, and then even more companies, and so on, the flywheel. The ecosystem that supports these companies today includes repeat founders, seasoned executives who mentor and invest in new companies, experienced local investors such as Team 8, and many foreign investors that set local shop in Israel, or at least has dedicated Israeli strategy for their funds. A significant share of global cyber funding goes to Israeli-related cyber companies every year.
Thank you. And bringing the conversation into AI, it's creating new challenges across the attack vector, and with that, opportunities with cybersecurity. When you talk to CISOs as part of Teammate's venture creation model, what are you hearing, and where do you see the biggest white spaces?
Yeah, so obviously AI, and AI is driving cyber innovation in three different ways. The first and most obvious one is AI as an attack surface. And we've seen this pattern before in cybersecurity. For example, cloud security and Wiz emerged to secure cloud computing. And we believe that AI risks, and as a result, AI security will actually be the biggest category as of yet. Our interactions with CISO communities support this idea. In a recent teammate survey, the top two priorities for CISOs were first, securing agentic AI, and second, governance of AI. At the same survey, about 67% of the CISOs estimated that their organizations will deploy AI agents within a year, which helps explain why this is such a high priority. The second one is driven by the use of AI by attackers. Attackers were very quick to adopt AI, and it's evident everywhere. We're seeing phishing attacks that became significantly more sophisticated and more successful. Deepfakes, video impersonations are driving fraud. Every CISO that I've talked to recently experienced it firsthand. And this major development is forcing CISOs to rethink their strategies across the board. Just yesterday, we've launched a company called Astelia that reinvents vulnerability management. And vulnerability management is an old category, but in the wake of AI attackers exploiting vulnerabilities in hours instead of in months before AI, CISOs need to consider new strategies, and that's just an example. The third and last one, similar to in other verticals, CISOs are looking to automate and streamline their operations. A good example here is SOC automation of security operations centers, which when we asked CISOs came first as their top use case for using AI.
Thanks, Amir. Yeah, I can imagine we have whole HR departments to guard how employees operate within an organization. I can imagine we need something similar for agents. Moving on to M&A, Jake and Andy mentioned it. Israel had a landmark year. Wiz, CyberArk, and your own portfolio company, Koi, was acquired by Palo Alto Networks just last week for $400 million, only after a year in operation. Obviously, the liquidity is huge for the market, but can you speak to the energy that's going on in Tel Aviv amongst the high-tech community? And how do you think about advising founders from the VC seat when it comes to taking an exit or keeping the company in their own hands and swinging for something bigger?
Yeah, so the energy in Tel Aviv was always high. In Israel, it's cool and desirable to work at a startup. People work hard and focus on the upside. What changed with the recent mega acquisitions is that they raised the bar for what's possible. The sweet spot for a successful exit in cyber is in the 100 to 400 range, but founders and employees now have more reasons to keep building and aspire for higher outcomes. As you mentioned, just last week, we sold Koi to Palo Alto at the top of that range, and after just a year. So it's a huge success. A different example from our portfolio is Clarity, the company that I founded before joining Teammate. Clarity keeps growing, selling hundreds of millions a year, and is aiming for an IPO, so we have both. When we build and invest in companies, we always aim for longer journeys and bigger outcome. We don't invest in companies that are limited in what they can achieve. However, in cybersecurity especially, and unlike other industries, it's easier for a buyer to reliably evaluate a startup in its early stages and as a result, acquire it for a premium price early on. For example, successful deployments in a few large enterprises may be a good enough indication that the industry needs the solution, and the potential buyer may be able to scale it and sell it to his customers. As a result, it's not uncommon to get great offers for cybersecurity startups early on. And when a company gets an offer, we will always consider it together with the founders. For employees and founders, of course, an exit is often a life-changing event that it's hard to resist. And as investors, we have now, these days, more tools to motivate founders to keep building, and we're trying to use them. Secondaries have become very common, but it's still a very hard decision for most founders to keep building in such situations. Of course, we'll encourage them to do it.
Thank you. And for the last question, these exits that we're speaking to, they seem to be driving up U.S. investor participation. Our report indicates it now stands at 49%, the highest we've ever tracked. How have you seen Teammate's U.S. co-investor network evolve over time?
Yeah, first, as I mentioned before, many global investors operate in Israel. There's a clear trend here that accelerated in the past few years. Many established presence in Israel, and for many more, Israeli cyber is part of their strategy. And it's really hard to invest in cyber and skip the Israeli market. Now, naturally, that leads to higher participation. And another factor is that more companies now, following the Wiz success and other successes, stay independent for longer, and some aspire to go all the way to become public companies. So while most Israeli investors are focused on early stage investment, these growth companies attract more US investors with specific expertise to support them in their growth stages. At Teammate, we see it, the list of investors that we work with has grown significantly. The company that I've mentioned, Astelia, that announced yesterday, recently raised their A round with participation with Index, a top tier VC that recently opened shop in Israel. So we see that more and more.
Wonderful. Well, thank you, Amir, for your participation, all of Teammate's collaboration with SVB. Now on to learn a little bit about LATAM with Nico Toro.
Thank you very much, Sawyer and Amir. It was a great conversation. Nicholas Toro from Colombia, and I'm the head of LATAM at Silicon Valley Bank, here now for 2 years, having an incredible journey with the bank. Just so you know, LATAM here, we cover both the VCs, banking around over 90% of the LATAM VCs, as well as the startups, and have been in the market for 13 years, building up and supporting the tech ecosystem in LATAM. And among those early partners was Atlantico and Julio. So Julio, great to have you here with us. Please, let's start off with you telling us a little bit about Julio, about you and about Atlantico and what you guys have been doing.
Perfect. Thank you, Nico, and everyone from the SVB team. It's been great to know you, I think, from, as Andy mentioned, his very first visit down to Brazil. I've been an entrepreneur for about 20 years, about half that time here in Latin America and half the time in the US. I started Atlantico in the last 6 years, so kind of going over to the dark side of the force. We focus on early stage investing, primarily Series A's, but we will go all the way from kind of larger seeds all the way to early B's. And we're currently investing out of our second fund now. We invest throughout the region, I think with a little bit more of an emphasis on Brazil in general.
Thank you very much for sharing that story. And it's usually the great way to start a VC is to have gone through the trials and tribulations of being a founder. So I want to start off with what Jake was mentioning before, which is this whole LATAM tech talent that we keep hearing about. It's a great accomplishment, and I'm very proud to say that, LATAM, both Mexico and Brazil, are at the top receivers of the O1 amazing talent or special talent visas. So let's discuss about that, how you see that within the entrepreneurs that you invest in, and let's discuss how we can spread this from beyond Mexico and Brazil to other countries across the region, how we can also retain more of this talent, and who can also turn these special talent from employees in US tech companies into founders in LATAM.
Yeah, I really like this data because I think it very objectively shows the quality of talent you have in Latin America, right? People that are being considered by the US government as exceptional people that are worthy of these visas. And I think there's two ways of looking at it. One is, I think, the quality of the talent. I think obviously some of that talent is going to move to the largest technology market in the world, which is the US. And I think that's fine. And I think we see that with China, India, and a lot of these other markets that I think have very healthy levels of entrepreneurship domestically. And I think the other one is how much of this do we retain and see as entrepreneurs here? And I think that there's also some interesting new emerging data behind the numbers that we're looking at. I'll tell you the story of a company we recently invested in called Vetto, VETTO. They're basically a data provider for training of large frontier models in AI. And the founder just recently got an O1 visa to move to the US. So this is a company that was founded in Brazil, is at the forefront of technology, has hired a bunch of the top AI researchers out of DeepMind, out of Meta, and is now competing globally. And the founder being able to be in the US and sell to these big clients is a big thing. So to some extent, also what these visas show is that they're really global level talent that you have in Latin America. A lot of these folks are looking at US markets and expanding there. But looking at, I think, entrepreneurship in general, I do think that the level of entrepreneurship here has been very healthy. If you take, people like me that maybe 15 years ago moved back to Brazil from working in the US. In my case, I worked at Facebook, moved back to Brazil and started a company, Peixe Urbana, that was a hyper-growth company at the time. I think that was really the story of that first wave of entrepreneurs. And the wave of entrepreneurs that we're seeing today is much more, I think, of an evolution of an ecosystem where you have people that come in, they go out of university, they work at some of the best technology companies, and they go off and start their own tech companies. Last year alone, we mapped over 130 companies that were started and were venture-backed and had been started by founders of the first wave of unicorns. So I do think that shows a little bit of this maturation of the talent base in Latin America and how that people are starting, they're working technology, they're learning, and they're going off and staying here and starting the next big wave of technology companies.
It'd be amazing to see how in Latam we've evolved and we've had the Meli Mafia or the Rappi Mafia, these employees that work in these amazing super growth companies and then jump off and found their companies. It'd be amazing to see if we have some sort of O1 mafia eventually. All these Brazilians, Mexicans, Colombians, Argentinians that are earning this O1 visa and working for top like Googles and Metas. And eventually they learn the trade and they come back to Latam and start building again. It'll be something to aspire to. So as we're talking about building in the Bay Area and, it's been touched upon the big AI boom in SF, in China. Let's discuss it in LATAM terms. What does AI look like in LATAM? What is our edge? What are our opportunities? And how is AI playing a role in building startups in LATAM?
Yeah, I'd say that AI is obviously top of mind. It's sort of a theme that's been near and dear to us, I think, since day one. If you look at, for example, the top 3 AI companies in Latin America, we're investors in all 3 of them, and I think we're the only fund here that is. One of them was this company, Veto. And again, I'm going to give you that example as a company that's an AI company, but that can compete at a global scale by going to the United States. That company, as an example, I think has been following a lot of the hyper growth that we see a lot in the headlines. A company that, I don't know, we invested 6 months ago, was doing almost 0 of revenue. Beginning of the year was doing probably in the low single-digit millions of revenue, is now in the tens of millions of revenue, and probably in 2 or 3 months will be in the 100 million plus of revenue. So I do see part of the opportunity for AI in Latin America are stories like those, which are LATAM to the world. I think another great example that I think also exemplifies the type of opportunity you have here are companies that are taking very large problems that we have here and are taking these new capabilities to solve those problems, and through that creating a lot of value. We invested in a company called Enter, which is Latin America's leading enterprise AI company. We invested first about 1.5 years ago at the seed alongside Sequoia Capital, and then most recently we doubled down with Founders Fund in their Series A. And what the company is doing is going after the legal market here in Brazil and trying to help big enterprises fight lawsuits in a very efficient manner. Just to give you one example, LATAM Airlines has 98% of their legal costs happening here in Brazil. And it's a big client, for example, someone like Enter that's working with them for tens of thousands of different legal defenses, of which they've been able to, I think I saw this case study that they posted this week on LinkedIn. They were able to reduce, I think, by 30%, or sorry, increase by 30% the win rate of dismissals of some of these cases, and also reduce on average the amount that was lost. So I think that's a very clear and easy and tangible example of a company that's leading in the region. It's growing a lot by taking AI. And I think that if you think about what's next for a company like Enter, I think what we like to believe here, it's almost like this, we call this Sinatra effect of kind of, if you can make it here, you can make it anywhere. And again, I think legal is one of those examples where if you can navigate the legal landscape in Brazil and in Latin America, you've probably built a solution using AI that is world-class, and you have a right to play elsewhere in the world. So companies like Enter that can win Brazil first really have a right to play, and we think a right to win eventually as you think about the AI opportunity. It's these default local opportunities that then become global. I think another last example here again is what are some categories that we in Latin America are really good at historically, and how do those manifest themselves in AI? We, as I think some of the data has shown, have been world-class in terms of fintech innovation, right? We talked about Nubank before. Nubank today is the best and the largest and the leading neobank in the entire world. We recently backed the former CTO of Nubank in going into a new financial services fintech endeavor using AI to revolutionize fintech. And again, this is sort of one of the people that's helped build one of the largest and leading fintechs of the world. And we believe that can take AI, take a category that Latin America has historically been very, very strong, build a company that starts here and then eventually goes global. So I do think that you have these opportunities here in AI that are, I think really, we're starting to see more and more of them with extremely talented founders, and that I think have global opportunities when you think about them in the long term.
Yeah, that's very interesting because you're just merging both the two issues that we're discussing are combining to my next question, which is there's an AI LATAM opportunity and there's an incredible talent. But something that we've been seeing this, especially this last year, is how LATAM VC is going global and going international. And now we're seeing how a lot of LATAM funds are investing in US companies, and they're setting up offices in the Bay Area or New York. And it's all starting off with Latinos building in the US. So a case in point of that is a company called Runway, which is an AI company founded by Chilean founders in SF. So I'd like to deep digger on this and tell me what you're seeing as a fund and how LATAM VCs are going global.
Yeah, I mean, I think it's easy to look at the global tech market, and it's obviously very attractive, and to kind of go and run after it. I think I have maybe a slightly contrarian view in this, just as a little bit of perspective. Before Atlantico, I had an opportunity to work at Benchmark Capital in Silicon Valley, and I think I saw from inside what a world-class venture firm is like. And let me say that I think in the US venture market, you really are playing at the very, very top. It's a very competitive market. You're sort of really at the finals of the Champions League. And I think that if you're a firm anywhere in the world, and this is not a Latin America specific point, and you want to go and you want to play in the big leagues, and you want to compete in Silicon Valley, I think you have to have a really good answer to the, where do I have a right to play, not even a right to win in terms of going into a market. So I think we are seeing a lot of people that are being adventurous and going into the United States. I think some of them do have a right to play, and they actually have an edge that they can go work on. But I think that the vast majority are going to end up in, I think, unhappy surprises. I think we here as VCs often tell our entrepreneurs that the most important thing is focus in the business. So we believe a lot in trying to maintain focus in our own business and trying to play in those markets that we think we can be number one. I think trying to do something on the side in the most competitive market in the world is very challenging. And I think you have to really ask yourself the honest question of, if someone's raising from you and they're competing in the United States, why are they not raising from Benchmark? Why are they not raising from Sequoia? What can you bring as a foreign VC that's unique to that? And is there perhaps an adverse selection issue in the founders that you are going to be able to back out there? I'm skeptical. I think a few folks have been able to show that it's possible, but I don't think it's probable. So my view here is, I want to follow my own advice. I think focus where we have a right to win and ultimately be number one in what we think is a really attractive market, which is Latin America. And I think that applies to, I think, people that are in Israel, people that are in India, people that are China, that are all very extremely important and valuable markets. And I think that we can do, I think, the ecosystem quite a service in terms of bringing financing here and bringing expertise here without needing to go into the US markets.
Thank you very much. We always appreciate a contrarian view here at SBV. And with that, I'm going to pass it on to Andy. And thank you so much for being with us, Julio.
Thank you, Nico.
All right, that was terrific, and I want to thank all of you again for joining us. Again, if you haven't taken a look at the report, please do reach out, let us know what you think, and I want to thank Paul, GV, Amir, and Julio for their participation in today's event. And yeah, we'll see you guys soon. Take care.